Welcome back. The housing market expected to shift in 2026 as President Trump works to encourage the younger generation of American homebuyers. The 30-year fixed mortgage rate now sits at 6.2%. That's about just over 5.5% for a 15-year fixed, higher than most people want. Mortgage rates expected to drop, however, slightly at least, heading into the next year as the Federal Reserve is cutting interest rates and did so this week by a quarter point, a third straight cut. Joining me now is the founder of Serhant and CEO of Serhant, Ryan Serhant. Ryan, good to see you. Thank you so much for being here. First of all, since the Federal Reserve started cutting interest rates, how likely is it that a cut in rates on the short end from the Fed trickles down to mortgage rates?
It'll happen. It'll just take a significant amount of time. And there's no trickle-down cut that's going to make a massive difference in the housing market. The market is affected by inventory, and 90% of all home loans in the United States are still under 5%. Most people, especially in luxury markets, have rates that are under 4%, if not under 3.5%. So you have COVID locked-in homeowners. You have boomers and Gen X's who are living in 5 bedrooms that are totally empty, who can't even afford to move. And you have first-time home buyers who are completely priced out because the monthly payments are too high. And sellers are coming off the market because they're not getting their pricing. And so inventory is the topic.
And inventory has been the issue for a long time now, Ryan. I mean, you're urging renters at this point to get back into the housing market, predicting a big shift in 50 years. Why? What are you seeing?
Well, we're seeing people make a tough decision. Do I rent and not build equity, or do I own, even if that means a new form of ownership? So something we're seeing, and we're going to see it more in 2026, that I've never done in my career, is co-ownership. First with parents, and that's something we've seen for some time, but now with partners, with friends. Instead of sharing a 3-bedroom rental, why not put together down payment dollars, share an LLC ownership, split it 3 or 4 ways, depending on the state, because the laws are different, and actually go into a great investment opportunity. We're seeing that more and more and more. Okay.
And we've been waiting for this so-called Mamdani effect. This New York City exodus to Florida might not be playing out as predicted. There's a new report from Douglas Elliman finding that 89 new home contracts were signed in the Big Apple. 122 new luxury apartments being listed for sale right now. This despite the New York Post reporting that Miami realtors are seeing a 166% surge in inquiries from New York City's wealthiest residents to escape socialism now that Mamdani's coming in. What trends can you tell us about that are happening right now in luxury housing?
One, I wouldn't believe anything I ever heard from Douglas Elliman, so I think the headlines need to be taken in some context. The Mamdani effect lasted for maybe 24 hours when there was an immediate fear. And then Hochul, our governor, came in and said, a lot of what we want to do isn't going to happen. New York City isn't going anywhere, and it's the greatest city in the world, and everyone calmed down. And we've had 5 weeks now of luxury market highs, because where else are you going to go? New York City is actually selling at a bit of a discount now. There is good inventory. Sellers are willing to do deals, unlike most places in the market, nationally anyway. And so it's a great market to do transactions in. We're going to have probably the largest December of my entire career. That's a first-time home buyer all the way to the top of the market, which is something like I just haven't seen since, I want to say, 2019. So people are active. And we're not looking for yesterday's normal. We're going into, I would say, a transformation of the housing market. And people are just finding new ways to live and new ways to move forward.
But did you just say, okay, you just said you would not believe anything. Who said?
Douglas Elliman. You gave me a report from Douglas Elliman. I wouldn't.
This is your competitor. This is your competitor.
Oh, yeah.
Okay. Cheryl, jump in here.
You know, Gil Deser, he's, of course, a multi-million-dollar developer down in Miami. He was on Fox Business. He said that along Billionaires Row, Ryan, that he is seeing increased interest in the Ritz-Carlton residences. There's a Four Seasons down there, the Bentley. He says that his phone is ringing and that you are going to see money move from New York to Miami. So are you hearing that as well?
Sure, but I think it's being exacerbated in the media. We saw the greatest move from New York to Florida in 2020. That's when I was on a plane twice a week, every single week, because there was shelter in place and people had to move, and there was a little bit of a tax exodus, as you saw. Because of Mamdani, you have some people who are getting off of the fence and going into Florida, but it's not what everybody's talking about. Yes, we are doing incredibly in Miami. Gil's a great guy. He's an incredible developer. His projects sell so well. I love bringing buyers to his buildings. We actually, on the newest season of Owning Manhattan, which just started streaming on Netflix, an entire episode is actually dedicated to Miami and the Miami market and our project, Mercedes-Benz Places, which is in Brickell, which is the fastest selling project I've ever been a part of, but it sells internationally. It's not just New Yorkers going to South Florida. Remember, there's a lot of other states in the United States too. You have in Washington state the idea, whether it ever goes through or not, of an unrealized capital gains tax, right? So you have a lot of people from Washington state also going to Florida, not just New York.
Okay. Yeah, well, that's what, money is mobile, and it'll move where it is treated best. We know that. Ryan, thank you. Ryan Serhant joining us. We'll be watching the market. And stay with us. We've got a big hour coming up right here. We'll be right back.